This is an update and technical analysis on QQQ, the largest component to the Nasdaq 100, the biggest component to technology in the technology sector, really comprised of all the big FANG stocks: Facebook, Apple, Amazon, Nvidia, Google. And this was actually on the 5th of January 2022, when I actually had only 5 days in and starting this channel, when I talked about this primary hidden uptrend line here off the 2018 reactionary highs and lows of the 2018 Xmas Christmas Eve stock market massacre. We had this hidden trend line this was going back a year ago. You're cutting through gaps, you're cutting through reactionary highs, hugging that uptrend line, rejection, came back out. That was your time to buy. And again, right through the COVID crash, snapped it, back tested it again, and again, never really looked back there. Came back out, recovered it, back tested it again, and that was your cue to get in. Back tested it again. That's your another buy the dip moment. Just a strong inflection point that had been running for years on end. Another buy the dip moment. Just another back tested once again, and just chopped around, back tested again. Came in, back tested again, and I had it had so many reactionary highs, multitude of reactionary highs, reactionary lows, hidden inflection point. Not a whole lot of traders seen it. Like I've always said in my previous videos, a lot of algorithms, computers, big institutions will see it. And I had mentioned on a solid break below that 383.22 price support, coinciding with the primary concealed uptrend line there. Nice solid candle below, and that was time. That was it. This was the peak inflation is transitory trade for a big move. I even called it the big QQQ short trade idea on my channel. Type in on playlist, click on the playlist, click on that search bar, type in QQQ, and you will find right amongst where I actually had the entire trade idea already pre-planned and hitting some additional targets that I ended up creating down the playlist of line there. So just another inflection point, big inflection point, and it was highly validated and snapped below. And I'll zoom out here to the monthly, zooming out to the monthly where we caught that big short, and that was good for a 34% crash. Long before everybody talked about how great the economy was, as far as the bond markets were pretty much unraveling and beginning to take a huge toll on the financial system. So what I'll do here is I have a new inflection point here. This is the renewed. This is the daily, off the daily interval. We have put in a nice, clean, big divergent high amongst this primary down trend line, reactionary high downtrend line off the 2021 November reactionary highs. Again, multiple reactionary highs, and here we are back testing it once again. But we are at a key pivotal inflection point right off the 618 Fibs retracement, call it 312.06. We got that 313.59 price support too as well, and I believe a solid daily candle close below there is going to really set off a sell signal and a big trading opportunity for the next move to the downside on a continued next leg down in this bear market. And you know, this continued quantitative tightening that the Federal Reserve's policy has been a subject of ongoing scrutiny. We have received recent data revealing that the Fed's balance sheet, which had reached an entirely new peak of $8.96 trillion, has now contracted to $8.65 trillion. The Fed's actual implementation of their stated plan to reduce asset purchases by $100 billion per month. It's been an entire year now, completely deviating from their original intentions here. It's beginning to become pretty laughable as far as everything they have gone from asserting that inflation wasn't transitory. This is just as funny as President Biden taking more questions from the press than any of his predecessors, as put forth by the White House press secretary Karine Jean-Pierre. Keen to the reactions of the press corps, who openly laughed in response. Such claims now just appear to join a litany of other statements, including assertions that inflation was transitory. Janet Yellen's "there will be no financial crisis in our lifetime." Janet Yellen's "the banking system is well capitalized," as evidenced by last year's negative GDP numbers for 2 consecutive months in a row. We had the definition and determination of a recession subject to reevaluation. The world out of nowhere completely forgot what a recession was or how it was defined. But as soon as they cut, I would only suspect a complete capitulation and flash crash. But here we are, potential sell signal impending off this 618 fibs retracement. Big key inflection point to watch. All traders more than likely will be watching it. Just a huge inflection point. Oh, we have the 50-day moving average hovering down below. Really starts to zip in line with 50% fibs retracement there. Nice decent line of support there at the 302.23 price support. And these would be your inflection points to watch here. Solid break below. We got that first target down to 50% fibs retracement for a 3.5% drop, down to 297.09 or 296.78 for a 5% drop, down to the 382 fibs retracement at 7.3% drop, down to 280 for a 10.6% crash, down to the 236 fibs retracement 276.54 for an 11% crash. And if we go on to breach the 236 fibs retracement, in my opinion, that's when the real panic begins. That's when margin calls, forced liquidation, stops to go off, mass liquidation. That's when we begin to have that huge credit crunch, in my opinion. That is such a key inflection point where we'll have a very just all around damaging indicators right across the board there. And I believe that would be the case for a big move down, really in an all-in big short moment there. I'll zoom out here to the monthly here. Where we have that 267.10 price support, a big primary uptrend line here, reactionary uptrend line off the 2008 great financial crisis lows here, cuts right through the COVID crash, cuts right through October reactionary low crash there. Just a massive key inflection point. All eyes on the 267.10 if we snap it, where we have the 50 monthly moving average hovering down below, just a triple line of inflection point. Again, that's where the real panic begins, in my opinion. We'll zoom out to that 267.10 and we'll implement it in this chart. And there it is. The 267.10, big key inflection point right off the monthly interval. And I believe that'll be the inflection point. Taking out the 236 fibs retracement just in general is a psychological level. But going on to retest it after you've back tested it, fell right through it again, recovered, back tested it again, came in pretty much back tested multiple reactionary highs amongst it, came back out, put that solid daily candle close. It's just been nothing but whipsaw's reaction. But if we come down to retest it for a fourth time there, especially if this sort of aligns with a potential primary uptrend line here, I truly believe that that's it. That'll be it, because the 236 fibs retracement, psychological level, carrying on down to that 267.10, that's going to do the trick in a fourth turning. There is no way that we're going to go down here, bob down around. Yeah, anything's possible. We could trade sideways for the time being, but that's when all hell breaks loose, in my opinion. What I'm going to do now is I'll zoom in on the 5-minute interval for any 0 day to expiration day traders here. Key inflection points to watch for them all. 4/13/2023 Thursday. Key inflection points I would really love. We got this primary hidden uptrend line here, coincides with the 236 fibs 308.15 price resistance. I would love a long short trade set, long day trade setup right amongst that key inflection point. And then big key level to watch right there is off that 618 fibs retracement as well. The 313.61 price support. Whether we go and back test it, recover it, and or go in to test on that 786 fibs retracement called 316 price resistance, coinciding with this primary reactionary high downtrend line. And I would only suspect some sort of reaction there. That'd be a nice reaction. Cuts right through a gap as well. Just nice, clean, hidden primary reactionary high downtrend line. I would expect a nice, clean day trade, short trade setup there, and then a long trade setup amongst this level. Even the gap, you're talking 311, what is it, 311.82 or 310.98. That 310.98 cuts right through. Call it a gap support there. Multiple reactionary highs and lows to help validate that. That'd be a nice, clean, objective day trade entry, especially if you were to gear on some potential divergences, maybe put in a divergent low where you have a sort of a wedge pattern there. And that'd be a nice, clean, especially if we get those positive divergences on near term, 1 minute, 3 minute, 5 minute intervals. That would be a clean wedge pattern divergent low on a potential nice clean day trade to the upside. Just little 3 key inflection point day trades to watch. Plan the trade and trade the plan.